पॉडकास्ट पहले चालू नहीं कर रही थी क्या? मेरे को आ रहा है क्या ना सर? हाँ, आपका वीडियो ऑफ है। पॉडकास्ट पहले चालू नहीं कर रही थी क्या? मेरे को आ रहा है क्या ना सर? हाँ,
Uh, Good evening to everybody who has joined today. Welcome to the 10th session of our GST Back to Basics series. Like we always do for all our previous sessions, we would request all our participants to mute themselves. At the end of the session, we will open the floor. If there are any queries, we can take it up at that time. Moving further, so last couple of weeks, we discussed input tax credit, the claim procedure, block credits, reversals, and so on. So moving forward now, after ITC, the next aspect that we are going to look forward to is reverse charge mechanism. So where can we trace back the history of reverse charge mechanism, RCM under GST? So probably we would have to go back further back to our service tax days, where the RCM mechanism was introduced for the first time. That same concept has now been carried forwarded under GST, wherein what we are told is that the supplier is not required to pay tax, the recipient is required to pay tax. That is the short and sweet essence of reverse charge mechanism under GST. So let me just give you a small example. So as we all know, under indirect tax, the person who is the supplier, he is the person who is expected to make the payment of tax to the government, even though it is understood that he is going to collect it from his recipient from the invoice, along with the invoice. Even though uh, he is going to collect it, but from the government's perspective, it is always the supplier who is liable to pay tax. For example, if I, as a service provider, I am crossing the threshold limit, providing a supply of service which is taxable, it is my duty to register and pay tax to the government. I am collecting the tax is one aspect, but I am expected to pay tax to the government when I am covered under the normal provisions of the tax. However, there are certain services, goods, wherein the government has said that as a supplier, you are not required to pay tax. You need not register also if that is the only supply that you are going to do. But the recipient, that is the person who is actually receiving the service from you, they are expected to pay tax to the government. So reverse charge mechanism is nothing but basically shifting of the liability from the shoulders of the supplier to that of the recipient. Even when you go back to service tax days, Generally, the government introduces RCM in those sectors where it is difficult for them to capture or the supplier, because they are in an unorganized market. Hence, they introduce RCM so that the recipient who are more likely in the organized sector, the tax can be recovered from them for those particular services. There are certain sectors wherein you will be baffled as to still not understanding as to why they are still under RCM. But more or less likely, generally when the government is not able to keep a track or catch hold of the suppliers, the smaller individual ones, that is where they introduce RCM so that tax can be collected on those supplies as well. With that background, let me take you to the next aspect that we are going to discuss today, and that is the legal provisions. Where does the power for collecting reverse charge mechanism enshrined in the law? So as far as the general RCM that is concerned, section 9(3) of CGST Act and or 5(3) of IGST Act provide that government will provide some specific categories of goods or services where the tax is required to be paid by the recipient. And more importantly, what the charging provision also says is that the remaining provisions of the act will apply as if the person who is liable to pay tax, that is the recipient, is the supplier. So they put recipient in the shoes of the supplier, and all the provisions of the act will apply accordingly to that recipient. The next basket is the very famous one, section 9(4), which we all know that when GST was first introduced, for the first 3 to 4 months, all the procurements from unregistered vendors were liable to tax, and that powers were derived from section 9(4). Subsequently, in October 2017, that was scrapped, and later on the provisions were amended, and the amended provisions read that government will specify certain categories of goods or services wherein the supplier is unregistered, and tax will be payable by specific class of recipients. So here what they have modified is that they have introduced, either they will bring in specific category of goods or services and also some specific class of recipients that will be required to pay tax. Simple example could be how the way the e-invoice provisions have been implemented, wherein first 500 crores and above were introduced, then 100 crore and above. So similarly in this also we may have something like this. However, let me clarify, these provisions are currently dormant, they are not operational. Once anything is notified under section 9(4), probably we will again have such a session to deal with the specific nitty-gritties of the provision whenever they are implemented. Moving ahead, so how are we going to go ahead today? So first, what I will do is we are going to capture the services aspect of it, wherein again I have divided it into 3 baskets: some general provisions which are applicable for everybody, certain RCM provisions which are specific for body corporates, and even further classification wherein some niche sectors, specific sectors are targeted for RCM provisions. We will take those up as the third basket. After finishing the set of services, what we'll do is we'll then move to goods, and under goods we'll first discuss import of goods, and then we will take on the other goods on which RCM is applicable. So the first category basically includes import of services, GTA services, legal services, arbitral tribunal services, sponsorship services, government services, security services, renting of residential dwelling services. All of these are generally applicable to most of the registered persons. In this, if we are aware that renting of residential dwelling is the latest one, which has been introduced with effect from 18th July itself, and there have been certain changes in GTA as well. So we will also be covering those aspects as and when we go ahead and discuss each of these individually. So first one, import of services. A very basic, simple, if I have to put, the requirements are such that the service provider has to be outside India. You as a recipient have to be in India. The place of supply on the basis of section 13 of IGST Act, if the place of supply is in India, only then import of service is triggered and you are required to pay tax under RCM. I hope this is clear. So service recipient outside India, service recipient in India, and most importantly, the place of supply has to be in India in accordance with the provisions of the IGST Act. So in general rule, section 13, what does it say is that location of service recipient is going to be the place of supply, except in the specific different sets which have been carved out. So there is one general rule wherein if your service do not fall into the individual separate baskets, then you go to general rule. And if your service is specifically covered by any one of these baskets, and then in those cases, the POS will be determined according to that specific provision. So let us just run through them very quickly. The first one being immovable property. So if any services are in relation to immovable property, your service provider is outside India, and if the immovable property is also outside India, then RCM will not be applicable. But if say you appoint a foreign architect who provides some architecture services for property in India and you are in India, then naturally place of supply is in India and you are expected to pay tax under reverse charge mechanism. Similarly, performance based services. So for example, if you're an exporter of goods, your customer is outside India, the transaction is where you are responsible for even having the goods cleared on the foreign destination. In such cases, the CHA who invoices you for handling activity done on the foreign port, in the foreign port, those cases will be covered by this example of place of performance. Hence, in those activities, you are not required to pay tax because the goods are handled. The cargo handling activity is done at a foreign port, which is outside India. So that is where the performance occurred. Same way is training and performance. Again, we look at place of performance. The next one is admission to an event or a park. So if for an event, your company has appointed you to attend the event, which is in say Bangladesh right now, you go there, you have purchased the admission ticket to that event. So in that case, are you liable to pay tax? So the answer is no, because the location of the event is again outside India. Assuming the service provider is also outside India, in this case also you will not be required to pay tax. Similarly, organization of events will be determined based on where the event is held. Transportation of goods. So again, continuing with that example of export of goods, say after the cargo handling is done at the foreign port, goods are then transported in a truck from the foreign port to the warehouse of your end customer, and you are expected to pay the charges for such transportation of goods. Again, in those cases, you will not be required to pay tax under RCM because the destination of goods is the warehouse of your final customer who is outside India. So again, the place of supply being outside India, you will not be required to pay tax. Next is transportation of passengers. Very simple, place where the passenger embarks on the conveyance for a continuous journey. That will be the place of supply. Services on board a conveyance will again be determined based on what is the first scheduled point of departure for that particular flight. Next is banking and financial services. So if any services is provided which is in relation to the account maintained, then the place of supply will be the location of supplier. In other cases, it will be location of recipient. The next one is intermediary. A very classic example, as an exporter of goods from India, I have obtained a particular order from a customer who is outside India via an intermediary, via an agent who is also outside India. So in that case, when I am paying a commission to that intermediary, I will not be expected to pay tax under reverse charge because the place of supply is outside India. The supplier, that is the commission agent, is also outside India. The last two ones being hiring of means of transport. Again, that will be based on location of supplier. And the last one, online information database access or retrieval service. In that case, the place of supply will be location of recipient. The last aspect, the online information, is actually gaining a lot of importance of late. So what are the different services which are covered under online services? It could be advertising on the internet, obtaining some cloud services digital data storage. It could be advertising on the internet, obtaining some cloud service, digital data storage, e-book, digital content. All of these are covered under the scope of online services. And if you as a recipient are paying certain consideration for obtaining such a service, then in that case, since the supplier is outside India, you as a recipient are in India, and since the place of supply for these services would be location of recipient, that is your location, you would be expected to pay tax under reverse charge mechanism under GST. That completes our first section of import of service. The next one that we'll discuss is GTA services. So who is a GTA? GTA is a supplier who transports your goods from one point to another and issues a consignment note. So when a GTA issues a consignment note and you are the person who is liable to pay freight, then you are expected to pay tax under reverse charge. That was the first initial provision of the law when the first GST law was introduced. Subsequently, on account of certain agitations, certain apprehensions by the GTA sector, what the government did was they introduced one more option, wherein what they said was the GTA can charge tax under forward charge at 12%, and he can claim credit of the input tax what he is receiving, or the recipient can continue paying tax under 12%, and but naturally the GTA will not be eligible for the credits or of his on his own procurements. Now come 18th July 2022, there are now three options available. The first one is continue 12% forward charge, or new option 5% forward charge. So either he can do 5% forward charge without claim of ITC, or continue 12% forward charge and claim ITC, or he can ask the recipient to pay tax under reverse charge at the rate of 5%. However, this option, once exercised for a particular year, they have to continue that for all their supplies of GTA for that particular year. So the provisions of GTA services as a recipient, they will be triggered for me to pay tax only in the case when the service recipient, that is, I have received an invoice that the supplier has not tax charged under forward charge. GTA should not charge tax at 5% or 12% under forward charge. Only then, as a recipient, I would be liable to pay tax under reverse charge mechanism at the rate 5%. So please check your invoices moving forward, which of the three options your GTA has actually exercised, and accordingly, you can decide whether you are liable to pay tax or the GTA is required to pay tax. So as we discussed, who is the service provider in this case? The next set is who is the service recipient. So service recipient could be a factory, a society, cooperative society, any registered person in GST, a body corporate, which basically includes a company under the company's law, and an LLP, partnership firm, or a casual taxable person. So if a factory or a society or a body corporate or a partnership firm, they are not registered in GST, but they receive such services where they are expected to pay tax under reverse charge, then in those cases, they will have to obtain registration under GST and pay taxes for such services under reverse charge mechanism. I hope this is clear. This was one aspect of the amendment that came in on 18th July. The next aspect is that earlier, up to 17th of July, there was an exemption which stated that if a transportation is done by a GTA, and for that entire carriage, the total consideration does not exceed 1,500, then that service of GTA was exempted. So neither the supplier nor recipient required to pay tax. Similarly, if say for example the GTA is taking goods for 10 people together from point A to point B, and from each of the individual he is charging 500 rupees, which is less than 750, which is prescribed in the law. If that be the case, even then for each consignee the tax was not required to be paid because there was an exemption up to 750 rupees. Now from 18th of July, both these entries go away. So irrespective of the actual amount of consideration which is charged by the GTA, tax will be payable either 5% forward charge or 12% forward charge, or 12% reverse charge by the recipient, except if the products are agricultural produce, milk, salt, food grains, organic manure, newspapers, magazines, relief material, defense or military equipments. If these are not your products which are being transported, then on all GTA transactions, tax will be payable. Please note that a very important change from 18th of July. Next service that we will discuss is that of legal services. So if I procure any advice, consultancy, assistance in any branch of law, including representation before any court or tribunal from an individual advocate, a senior advocate, or a firm of advocates, then I am expected to pay tax under reverse charge if I am a business entity in India. It does not matter whether I am registered or not registered. The condition in the law is only that I have to be a business entity. If as a business entity I receive a service from an advocate regarding any field of law, then the law says that the recipient is required to pay tax under reverse charge. If I'm not registered, the government expects me to get registered under GST and pay tax on such services under reverse charge mechanism. I hope this is clear. So generally for legal services, these are the two types of queries that people generally ask us. If as an individual, I take legal opinion about my own residence, which is going under redevelopment, will I require to pay tax under reverse charge? So the answer is no, because I am not as an individual, I am not functioning in the capacity of a business entity. Had it been that my business premises are going under redevelopment and I've taken an opinion, then yes, I would be required to pay tax. Similarly, as a firm, as a business entity, I go to my chartered accountant for matters regarding GST appeal or representation for a hearing before the tribunal. Then whether I am required to pay tax under reverse charge? So again, answer is no, because in this case, the supplier of service is not a legal firm or an advocate or a senior advocate. I hope this clarifies if there are any doubts on this matter. Moving further, the fourth one is on the similar lines to legal services is that of arbitral tribunal services. So if there are generally in huge contracts between two parties, they agree that in case of any dispute arises, they will refer to the dispute to an arbitral tribunal, which will be set up on the basis of both of the parties agreeing to appoint an individual or a panel of arbitrators who will then resolve their dispute. So in such cases also, the person who receives the services of these arbitral tribunal, that is the person who is going to pay the fees for the arbitral tribunal, he is required to pay tax under reverse charge mechanism, as the arbitral tribunal is not expected to pay tax on the services of dispute resolution, mediation, arbitration, whatever that is conducted. Again, in this case also, the business entity, if it is not registered but they receive services of arbitral tribunal, they are expected to comply by taking a registration and paying taxes under reverse charge mechanism. The next aspect that we are going to talk about is that of sponsorship services. Under sponsorship services, the service provider has come to the recipient, who is either a body corporate or a partnership firm, who will give an amount to the service provider, and in exchange they will appoint service recipient as being the sponsor of the event. So for example, if there is a yoga day that is being celebrated, and as an entity you sponsor the NGO for conducting that yoga day event, then you are the sponsorer and you have received sponsorship services from that NGO, and you are expected to pay tax provided you are body corporate or a partnership firm. If the service recipient is not a body corporate or a partnership firm, then the liability is under forward charge. Only in case when the recipient is body corporate or partnership firm, only in those cases tax is required to be paid under reverse charge mechanism. Again, the same caveat of registration applies for sponsorship services as well. The next one that we are going to discuss is that of government services. So there are certain handful of entries of government services which are taxed under forward charge. There are certain handful exemptions also. And in all other cases, when the service provider is the central government, state government, or a local authority, and you are a business entity in India, then you are expected to pay tax under reverse charge mechanism. However, one good benefit in this case is that if as a business entity you are not registered, you can continue not being registered, because in those cases RCM is not required to be paid. So up till now the caveat was reverse, and in this case is that only if you are a registered person and you receive services from the government, then you are expected to pay tax, provided it doesn't fall in the category of exemptions or the charges liable to pay tax by under forward charge by the government themselves. So which are the activities under forward charge? Services by the Department of Post. Then we have services in relation to an aircraft or a vessel which is either inside or outside the precincts of an airport or a port. Lastly, you have transport of goods or passengers. So simple example could be your BST ticket. If you have seen, they also charge you CGST, SGST, which is printed on the ticket that is given to you. So those are the services where government pays tax under forward charge mechanism. What are the exemptions in those cases where as a recipient, even though you have received services from the government, you are not required to pay tax under reverse charge? So the first one, as we discussed, your turnover does not cross basic threshold limit and you have not registered, and hence that is also exempted. Municipal functions as per the Constitution of India under Article 243W and 243G, if the functions are enshrined and those are the services that are received by the business entity, then in those cases tax is not required to be paid, because the functions are the ones which are listed under the Constitution. The next one is registration charges paid under the law. If one-time registration charges are paid, then that is not covered under reverse charge mechanism. Issuance of passport, visa, driving license, birth certificate, death certificate is also not covered under reverse charge mechanism. Tolerating non-performance of a contract for which the government charges you fines or liquidated damages. So in those cases also, the government will also not pay tax, and you as an individual, as a business entity, are also not required to pay tax under reverse charge mechanism. Lastly, you have this exemption for testing, calibration, safety check, certification in relation to protection or safety of workers, consumers, public at large under any law. So for example, when you go to restaurants, you have those big boards which says this premise is fire compliant, they have received fire licenses. So in those cases, when such services are also procured by such restaurants, they need not pay tax because of this exemption entry. I hope we are clear up to here. The next service that we are going to discuss is that of security services. Initially, when the law was introduced, security services were not part of the RCM list. They have been added subsequently. So what this entry says is that when any service is provided by way of providing security personnel to any registered person under GST, then tax is required to be paid by under RCM by that registered person, except when service provider is a body corporate. So if the person who is providing security services, they themselves are a private limited company or a limited company, then they are expected to pay tax under forward charge. But in all other cases, the service recipient is required to pay tax under GST. I hope so. Whenever you receive an invoice for security services, you may verify, cross check whether the service provider is a private limited company or not, or basically they are a firm or an individual who's providing such service. In that case, if they are a firm or a individual, then in those cases, you as a service recipient are expected to pay tax on such security services that you receive. The next one is the latest entry, which has been introduced with effect from 18th of July, renting of residential dwelling. So any service provider who provides services of renting of residential dwelling, very important, residential dwelling, to any registered person under GST. So only when a residential house is given on rent to a registered person, only then this entry will be triggered. And in those cases, the company is required to pay tax under reverse charge mechanism. Now, whether the service provider is registered or not registered, that is also not that does not matter. However, if the recipient is unregistered, then the service continues to be exempt as it was up to 17th of July. With effect from 18 July, only when the recipient is registered under GST, it is now that they have to start paying tax under reverse charge. Also, one important thing to note is that this entry should not be confused with that of guest house or inn, wherein you go for 2 days, 3 days for stays. In those cases, this entry will not be triggered. Residential dwelling would obviously mean a house for residence purpose, which is taken on rent for a longer period, for a longer duration. Only then this entry will be triggered, wherein RCM will be required to be paid by the registered person. Moving on to our next segment, wherein the recipients are specifically body corporates. So up till now, whichever entries we saw, they were relevant to everybody, including a body corporate. The next two entries of services of directors and rent-a-cab are very specifically relevant for body corporates only. So what the first one says is that when a director provides a service like director sitting fees or fees in his professional capacity to the company in which he is a director himself, in that case, the service recipient, that is the body corporate, is expected to pay tax under reverse charge. One aspect that they have clarified is that when the director is receiving salary for managing the daily affairs of the company, and the company is also deducting TDS under section 192 of the Income Tax Act, then in those cases, that relationship is that of employer and employee relationship, and hence that will not be a part of my supply of service, and hence tax is not required to be paid under reverse charge for such activities. In all other cases, like the example that we discussed is that of director sitting fees, that is liable for tax under reverse charge mechanism, and the body corporate, the company, is expected to pay tax under reverse charge mechanism. The next one is that of renting of motor vehicle designed to carry passengers, which in short we refer to as rent-a-cab services. So when a rent-a-cab service is procured, the cost of fuel has to be included in the consideration. So the charge that you pay, 7,000, 8,000, 3,000, 5,000, should include the cost of fuel. Fuel should not be separately borne by the recipient. The amount that is charged should be inclusive of fuel. The service recipient, as we discussed, has to be a body corporate. Now, who can be a service provider? So the service provider has to be any person other than body corporate. So basically, if a private limited company is giving a cab to another private limited company, then that service is not covered under reverse charge. That service continues to be under forward charge. Service provider is expected to pay tax. In other cases, if as a firm I am invoicing to a body corporate, then the body corporate is required to pay tax under reverse charge, except in one case where if I am charging tax under 12%. So as a body corporate or a non-body corporate, if I am charging 12% for the rent-a-cab services, then the recipient, being a body corporate, need not pay tax. But specifically here, it has to be noted that when the service recipient is going to pay tax under reverse charge, he is always going to pay tax at 5%, and that ITC of the credit will not be eligible. So again, summarizing this, service provider, if he's a body corporate, forward charge. If service provider charges 12%, again forward charge. In all other cases, service recipient who is a body corporate, they are required to pay tax under reverse charge at 5% for rent-a-cab services that they avail from such service providers. One important thing to note is that, again, in this case, if you are not registered but you are receiving such services of rent-a-cab, you are compulsorily required to be registered and pay tax under reverse charge mechanism. Now that we've completed all of the general ones and the specific ones for body corporates, the next set of services deal with very specific sectors, very niche. So we will not spend too much time, but I will cover all of these and also explain, but we'll go a little bit faster comparatively. The first one is that of transfer of development rights, or the floor space index, as we all know. So for a construction project, when a service provider transfers a development rights or transfers FSI that is available with him to a promoter of that project, then in that case, the promoter is expected to pay tax under reverse charge. Now, who is a promoter, that you might ask? So promoter is basically defined or referred to, or the definition is borrowed from that of RERA, Real Estate Regulation and Development Act. So if an individual is that entity who is a promoter classifies as a promoter on the basis of the definition provided in the RERA Act, then in that cases only he is expected to pay tax for such development rights which are transferred by the service provider. So the definition that is given under RERA Act is quite wide, which would cover any person who develops or promotes or intends to sell the property. They will be covered as the promoter. So promoters, whenever they are receiving development rights, be careful. Service tax, GST might be triggered for the transfer of development rights. Next, on the similar lines, if a property is given for a long-term lease, that is for 30 years or more, for a construction of project, and the service recipient pays a consideration in the form of an upfront premium, salami or token or periodic rent, then in all those cases also, the person who is paying the rent or paying the premium upfront, they are required to pay tax under reverse charge if they classify as promoter. Again, the promoter's definition is borrowed from the RERA Act. So if the project itself is not registered under RERA, then obviously this RCM entry also will not be triggered. But only in case where the project is registered under RERA and the person who receives the long-term lease is a promoter, then in those cases the promoter is liable to pay tax under reverse charge mechanism. The next one will cover together insurance agents and recovery agents. So basically these agents providing services, so insurance agent provides services to any person carrying on business, insurance business. So they would generally be insurance companies. So in those cases, the insurance agent is not required to pay tax, but the person who is carrying on the business of insurance they are required to pay tax under reverse charge mechanism, 18%, simple. Similarly, for recovery agents, so a recovery agent who works for a banking company or a financial institution or an NBFC, non-banking financial corporation, when they provide their services to the bank by way of recovering amounts from loan defaulters and so on, in those cases, the banking company is expected to pay tax on behalf of the recovery agents. I hope we are clear here. The next set that I'm going to take up is the transfer or permitting use of copyright. So here also we have two entries. The first one in case of dramatic musical artist work. So such an artist who transfers copyrights to a music company or a producer in India, in then that case the music company or the producer is expected to pay tax under reverse charge. Similarly, as an author, if I am transferring the copyrights for the book that I've written, the original literary work, to a publisher in India, then the publisher is expected to pay tax under reverse charge mechanism. Moving ahead, the next two services that I have again clubbed is that of a business facilitator or a business correspondent. These are generally used in terms of banking transactions, wherein RBI says that a business facilitator who procures business for a banking company but does not act on their behalf. They just procure customers for the banking company and act as a facilitator. In those cases, the banking company is expected to pay tax under reverse charge mechanism. Similarly, in case of business correspondence, the agent need not pay tax, but the business correspondent is required to pay tax. The slight difference in both these entries is that agent of business correspondent is, they are the person who actually also transact on behalf of the business correspondent. However, in case of business facilitator, they do not act on behalf of banking company. They just facilitate the transaction by way of, say, introducing the customer to the banking company. And for that, they receive a fee. So on that fee, the banking company is expected to pay tax under reverse charge. The last miscellaneous category is again very niche. Say, for example, the members of overseeing committee of RBI are providing services to the RBI, then RBI is required to pay tax. Then in other cases, an individual direct selling agents who provide services in the sector of obtaining customers who require loans. So in that cases, the banking company or the NBFC company who are receiving the services of these DSAs, direct selling agents, in those cases, the banking company or the NBFC is expected to pay tax under reverse charge. And the last entry for services deals with the fact that lending of securities, where a lender deposits certain securities with an approved intermediary for the purposes of lending, then in those cases, the person who lends securities need not pay tax under reverse charge. It is the borrower who borrows such securities under such scheme, they are expected to pay tax under reverse charge mechanism. I would just like to highlight that we have certain queries that have come in with respect to some of the, so we'll take those up at the end of the session. I have noted the queries and that we'll discuss. Okay, so now that we've completed the services part, next we are going to take is reverse charge mechanism applicable for goods. The first one that we'll deal with is import of goods, and then we'll take the balance together. So import of goods, in case, so as we all know, import of goods is triggered only when you are importing something from a country, from a place outside India, and you have imported them into India. So what the provisions say is that as per section 5(1) of IGST Act, so integrated tax IGST on goods shall be levied and collected in accordance with the provisions of the Customs Tariff Act on the value determined in the Customs Tariff Act at the same point when custom duties are levied on such goods. So here what they say is that when you are importing goods, at the time when you file your bill of entry for home consumption, that is when your custom duties are triggered on a particular determined value. On that value itself, you will be expected to pay tax of IGST as a recipient of such goods. So here, as we all know, specifically separately you are not expected to pay tax, but at the time of filing your bill of entry and getting the goods cleared, at that point in time itself you will be expected to pay tax along with the custom duties that are levied. Again, so similarly, when you are importing certain goods from SEZ unit into a DTA unit, in those cases as well, when you file your bill of entry for home consumption, IGST under RCM is also applicable. Next set is that of supply of specified goods by an agriculturist. So here the government has said that if cashew nuts, shelled or peeled, or say BD wrapper leaves, tobacco, raw cotton, these goods are supplied by an agriculturist to a registered person, then the registered person is expected to pay tax under reverse charge mechanism. Please note, the supplier has to be agriculturist. So if the supplier is not agriculturist, but if this transaction happens at a later date between two traders, that will not be covered because supplier of goods is not an agriculturist. Even when the supplier is an agriculturist, but the person who is paying such consideration to the agriculturist to procure such goods is not a registered person, then in those cases as well, RCM will not be triggered. The last set of entries, again, silk yarn. So manufacturer of a silk yarn who supplies such a silk yarn to any registered person, such registered person would be expected to pay tax. Supply of lottery, again, state government, union government, local authority who supply such lottery will not be required to pay tax under forward charge, but the lottery distributor or the selling agent is expected to pay tax under reverse charge mechanism. Again, another entry with respect to central government, state government, union government, local authority, when they are discarding any used vehicles or they are selling off any seized confiscated goods or they are just disposing scrap and waste. In those cases also, the government will not pay tax, but the recipient, the registered person who is receiving such goods from the government, they are expected to pay tax under reverse charge mechanism. And the last entry is that of priority sector lending certificates. So here, to give a short example, the RBI prescribes that certain amount of loans that have to be disbursed have to be given to priority sectors. And when a banking company fails to fulfill or reach that criteria, that is when they approach another bank who has exceeded their lending above the limit which is specified, and they receive a certificate from them and complete their quota. The loan does not change hands, but just by way of lending that certificate to the recipient, the supplier of that certificate receives a good amount of fee. In those cases, the person who supplies such priority sector lending certificates, they are not required to pay tax, but the banking company who receives such PSL certificates, they are expected to pay tax under reverse charge mechanism. With that, we cover all the entries which are specified by the government. Next, what we are going to deal is certain procedural aspects which govern the reverse charge mechanism that we will discuss. The first one, obviously, time of supply. When are you required to pay tax? So again, whenever the question is when you have to pay tax, the government will always say earlier the better. So in case of goods, what the government says is that whenever you receive the goods or whenever you make the payment of goods or even when you record the payment of books or the 31st day from the invoice. Earliest of all of them would be your time of supply when you are expected to pay tax. Obviously, in case of import of goods, this rule does not apply because tax has been enshrined as to be collected at the time when customs duties are levied. So at the time of filing of your bill of entry. Similarly, for services, whenever you actually make payment or even record the payment of entry in your books or 61st day from the date of invoice, whichever is earlier becomes your time of supply, and that is when you are expected to pay tax to the government under reverse charge mechanism for services as well. I hope we are clear with time of supply for RCM transactions. The next is the documentation aspect. So as we had discussed, I think last month, the documentation aspect for reverse charge mechanism transaction is that you have to prepare a payment voucher for all the payments where RCM is applicable, whether the supplier is registered or unregistered. That has been provided under section 31(3), and such payment vouchers have also been required to be as in they have to be, the serial numbers have to be provided in your GSTR1 returns as well. So payment voucher is the first aspect. The second aspect is the self invoicing. So for any procurements from unregistered person which are liable for RCM, for example, legal services, if the lawyer is not registered in under GST, you as a business entity receive such services, you pay tax. The government expects you to generate a self invoice for such procurements, and on the basis of such self invoice, as per section 31(3)(f), read with rule 36, you can claim credit in your GSTR3B. So for all RCM, you need not make a invoice. You can have 2 invoices per month, one for IGST transaction, one for CGST, or the name of your supplier address that can be mentioned as an annexure. Basically, once you generate the self invoice, on the basis of this self invoice, you can claim credit in your GSTR3B. Please note, right now, the requirements of self invoice are not required to be entered specifically or given to your supplier or any such thing. It is an internal document required to be maintained internally by the company. Hence, if till now you have not been preparing a self invoice, we would recommend that you prepare a self invoice for every month's RCM ITC that has been claimed. So that is one aspect of the self invoicing that we wanted to highlight. The next aspect that we wanted also to highlight is that many of the registered suppliers are filing their returns and reflecting the transaction as RCM applicable transactions in the GSTR2B. So as long as the tax that you are paying as reverse charge mechanism matches with the transactions in GSTR2B, and over and above those also you are paying on certain transactions wherein the supplier is unregistered, well and good. But please make sure if there are any transactions from a registered supplier where the tax is required to be paid under reverse charge mechanism, then please ensure that those have been reconciled with the ones appearing in GSTR2B and the books, and no such entry is missed out where RCM is required to be paid by the recipient. Next and the last aspect that we wanted to also highlight is certain improvements in the process for identifying paying reverse charge would be, you can have certain specific ledgers which are earmarked for RCM expenses only. So if the expense entry hits that particular ledger, then RCM entries are automatically triggered. Your RCM liability and credit entry may be auto posted if your system is smart enough to capture those entries as well. Further, as we discussed, generating self invoices every month, even though they are an internal document, it would always be suggested that such invoices are generated and kept in your records every month. Matching of registered RCM as appearing in your GSTR2B with that of the books to ensure that either the transaction is yours and you have paid tax, and in case if you have not paid tax, such reconciliation might also help. Since in most cases, ITC is eligible in the same month, this exercise may not yield any negative impact, but if department comes in after 2-3 years and highlights this, then in that case you might not be able to claim your credits again. One more aspect that we wanted to highlight is that bill of entry details have started to be reflected on the GST portal, which have been pushed by the ICE gate. So you may also opt to reconcile your bill of entry details, probably monthly, quarterly, half yearly, based on the quantum that is available. So in that case, very much this will also help to ensure that if any bill of entry has been missed by you to claim ITC or which is not appearing, then that details can be matched and suitable actions can be initiated. On the GST portal right now, there are options where you can actually fetch your bill of entry details if they have not been pushed by the ICE gate. So please make sure this is also done. Lastly, also it is important to disclose the RCM ITC entries correctly in GSTR 3B and not mix it with your all other ITC. We have seen that at many places the notice is received, and then while reconciling or preparing reply, it has come to our notice that the client has reflected RCM details in the incorrect rows, and that is why the notice has come up in the first place. So please do also take care of disclosure of your RCM liabilities and RCM ITC. So that is all for the day. I'll take up the questions that have been posted on the chat. So the first question is whether hostel is a residence or not. So I believe hostel would be categorized as a guest house or a inn which is separately taxed. So that is not getting covered in hostel. And also I believe hostel would generally not be taken on rent by a registered person. They are generally students. So again, in those cases also, I think the RCM entries would not be triggered. I think I'll take a couple of renting questions have been clarified. So the first, again, another one, RCM on house rent, whether our rate of RCM 18%, limit, there is no limit, sir. If house rent is paid for staff, then should the company pay RCM or not? So here it depends who has agreed into the contract. If the invoice for renting has been received in the name of the company, then we believe that company is the recipient and hence the company is liable to pay tax under reverse charge. The next question for rent, again, renting of dwelling house, registered individual proprietor can take ITC on RCM paid on rent. Is it fully allowable? Income tax we are showing 50% as income. Again, here I would again say, so if you are paying rent for a residential house as a company or as a registered person in GST, you will not be able to claim ITC because that is for your personal consumption or personal consumption of the employees. So claiming ITC of the RCM paid is a very questionable right now. Initial views seem to be ITC will not be eligible. A couple of questions, again, self-invoicing required for procurements of agricultural produce. So again, I would want to clarify, Ravi sir, that self-invoice is required is not on the basis of products. It is on the basis of all the RCM tax that is paid. So if you have paid any tax under RCM, then yes, you are required to generate a self-invoice because your claim of credit is based on those self-invoices only. Another one is that of RCM on tractor hire charges. I believe tractor does not fall under the category of renting of motor vehicle for transport of passengers. So if rent a tractor hire is not a part of rent a cab, then I believe RCM will not be applicable on such hiring of tractor as well. Obviously, tractor is not used for transportation of goods as well. So under GTA category also it will not fall. So with that, I think we've covered today's session and also the queries. Thank you everyone for joining. I hope a lot of your queries have been resolved. If something has been missed, that has now been made aware to you. Thank you so much. See you next week. We'll have another session. Hoping to see you all in large numbers again. Thank you.